There's a lot of anxiety about the election right now and about stock markets because you hear people talking about possible market collapses, the market's going to crash, the market's going to drop significantly in value, almost no matter who gets elected. And I want to talk a little bit about, are there reasons we might want to be nervous, or are there reasons we might not be nervous? And we'll talk about the difference between the two. Now, number one, I had a meeting with several people this week, and they were talking about friends of theirs worried about the stock market. Some people, there are reasons to be worried, especially the way most mutual funds manage money. Quite often, people aren't nearly as diversified as they really should be when it gets down to it. Now, I'm going to walk through some really popular mutual funds and talk about where I see problems. Number one, if we look at, for example, American Funds right here, they have a mutual fund for a person retiring in the year 2040. If you're retiring in that year, this is how they're going to be managing the money. Now, right down here, you have this thing called the style box. And what you're noticing is that the top box shows whether they're investing in large companies, middle set of boxes, medium-sized companies, lower set of boxes, small companies. Notice where the money is concentrated up in that large area. Now, we'll talk about why that's a problem in just a second, but I just want you to notice it with other fund companies as well. Same thing with BlackRock. Up top of it there, right there, large companies and mainly growth in what we call blend. If we look at Fidelity, same thing all over again. If we look at Vanguard, same area of the stock market. Or if we look at Voya, same area of the stock market. Now, why is that an issue? Well, I'm going to give myself a little space here and explain this. If we look at investing, there are factors that drive returns historically in markets. And number one is, how much do you have in small companies? How much do you have in large companies? How much do you have in growth companies? How much do you have in value companies? Right now, where do most people have their money? What we notice when we look at the statistics for these mutual fund companies, the vast majority of money is right in that area right there. In some cases, it's 70, 80, 90% of money is invested in that area of the market. Now, that area of the market, as we speak right now, I have actually a data report on this, has somewhere in the neighborhood of a price to book, which is what price the companies are selling for compared to book value or their assets. The S&P right now is at 4.24 as I speak right now. That's the price they're selling for every dollar of book value or the assets of the company. Now you look at that and go, well, how does that compare to other areas of the market? If we look at, for example, small companies right now, it's anywhere from 1.59 to 1.78. I won't draw both of them. If you look at large value stocks in the US, they're 1.93 as we speak right now. We look at small value stocks, it's $1.07. Now, if we look at international markets, I won't go through all of them, but international markets, it's even lower. If we look at international small value right now, 0.8. That's it. That's what those companies are selling for. Well, what does that mean? Well, if I have companies selling for a super, super high price, they have a lot of room to what? Fall. So the average American investor doesn't realize how much risk that they actually might have. It reminded me of a story. I was telling a client this morning. We were talking a little bit about markets and history, and I said, I remember when I opened this company. I was telling of a story of a lady that came in here after the tech bubble burst. Well, tech stocks went down about 80%. And most of her money was in that area of the market. Now, during the 90s, people felt bulletproof. Well, what happened with her is she came in after hearing me on the radio and says, I was going to retire this year and I can't retire. Now, there was nothing I could do to save it necessarily, but I could help fix it so that we could get her in a place where it looked better in the future. But man, I wished that she had come in the late 90s before all of this happened, because then we could have prevented the problem. That's really key. Recognize that a lot of investors are nervous about the stock market. Some people, if you're diversified, I don't see a big reason to be worried, because a lot of areas of the market aren't selling for super, super high prices. But if you're an investor and you look at these big mutual fund companies, most of the money being concentrated in this area that has the highest price to book, there might be reason to be concerned, but it's something you can do something about now, because it hasn't happened yet. Get on top of this, start to work, start to plan, and that'd be a good reason to come see us, really. We'll see you next time.